Hey everyone, welcome to The Explainer. Today we're getting highly practical. We are cutting right through all those glossy travel brochures showing laptops on the beach, and we're going to do a grounded, comprehensive deep dive into Greece's digital nomad tax incentives. Look, if you've been seeing the headlines about moving to the Mediterranean and completely slashing your tax bill, well, you're in the right place. We're going to break down exactly how this whole thing actually works, the realities of that legendary Greek bureaucracy, and exactly what you need to know before you even think about packing your bags. Okay, let's just dive right in.
Right off the bat, this is the number that is turning heads globally, 50%. Under a very specific legal provision known as Article 5C, Greece is offering eligible digital nomads and remote workers a massive 50% exemption on their income tax. And guys, this isn't just some minor nice-to-have deduction. This is literally the core reason high-earning professionals are seriously looking at Greece as their next home base. It essentially halves your taxable base, and it does it for up to 7 consecutive years.
To keep things totally clear, we're treating this explainer like a pragmatic playbook. So here is our agenda. 1. The half-tax headline. 2. Visa eligibility and rules. 3. The regulatory loophole. 4. The step-by-step timeline. And 5. Hidden costs and trade-offs.
All right, let's kick things off with Section 1, the half-tax headline. Let's translate this policy into actual real-world dollars.
Because, this isn't just some sensational headline on a blog. It is grounded in absolute reality. We're looking at the official documentation right from the AAD, that's the Greek Independent Authority for Public Revenue. This formally establishes the Article 5C tax incentive. Now, to qualify, you must not have been a Greek tax resident for 5 of the past 6 years, and you have to commit to staying in the country for at least 2 years. But if you meet those criteria, boom, 50% of your Greek-sourced employment or business income is completely exempt from income tax for up to 7 years.
So what does this actually look like in practice? Well, let's run a concrete financial simulation for a remote professional who's earning 100,000 euros annually. Under the standard progressive Greek tax system, the total personal income tax due would be a pretty hefty 34,900 euros. But under the Article 5C exemption, your taxable base is just chopped in half, down to 50,000 euros. After running that new number through the progressive brackets, your total tax drops to just 13,400 euros. So the absolute crucial takeaway here is that this earner practically pockets an extra 21,500 euros in annual tax savings. It's a real game changer. It drops your effective tax rate from nearly 35% all the way down to just over 13%.
I mean, that is incredibly compelling, right? But who actually gets to use it? Let's get into Section 2, visa eligibility and rules.
Okay, so here is the strict eligibility baseline you absolutely have to clear for the Greece Digital Nomad visa. First up, you have to be a non-EU or non-EEA citizen. Second, you must prove a stable net monthly income of at least 3,500 euros. And take note of this, if you're bringing a spouse, that requirement jumps up by 20% and then another 15% for each kid. Third, you can only work for foreign employers or clients. You absolutely cannot participate in the local Greek labor market. No local clients, period. And finally, you're going to need comprehensive health insurance covering your entire stay in Greece, plus a totally clean criminal record.
But wait, here is a massive update you really need to be aware of for 2026. Under Law 5275/2026, the whole old route of just arriving as a tourist and casually applying for your Nomad visa while sipping or paying in Athens, yeah, that is completely abolished. The arrive first, apply later loophole is permanently closed. It is now an absolute legal prerequisite to obtain a national Type D digital nomad visa from a Greek consulate or embassy in your home country before you ever even set foot on Greek territory.
And honestly, that brings us to the most complex part of our entire explainer. Section 3, the regulatory loophole.
We've hit a major paradox here. The digital nomad visa immigration rules strictly require that you work exclusively for foreign clients and have absolutely zero local employment. But the Article 5C tax law historically requires that you are either employed by a Greek entity or operate a self-employed business from within Greece. Just let that hang for a second. It's like a giant puzzle. You must be foreign funded to keep the visa. Actually, scratch that. It's more like you can't be locally funded to keep the visa, but you must be locally structured to get the tax break. If you just show up and work directly for your US company as usual, you risk falling right into this regulatory void where you owe super high Greek taxes but can't legally claim the 50% exemption.
Okay, deep breath. So, how do we legally bridge this gap? Well, there are 2 perfectly compliant legal workarounds.
Pathway 1 is setting up a Greek sole proprietorship. Pathway 2 is using an employer of record, or an EOR model. If you're a salaried employee, an EOR basically acts as your legal domestic employer on paper. They manage the local payroll and taxes, while your foreign company still actually funds your salary. It's a neat little trick that perfectly satisfies both the visa office and the tax code.
But for all you freelancers out there, Pathway 1 is definitely the go-to. This is called an atomiki epicuracy, the Greek sole proprietorship. By registering this local entity with the Greek tax authorities, you satisfy the Article 5C requirement of conducting a local business. Now, to stay compliant with your digital nomad visa, your sole proprietorship must exclusively invoice foreign clients. 0 Greek clients allowed. By doing this, you perfectly honor the immigration prohibition on local competition while fully unlocking that massive tax cut.
Okay, let's shift from all this theory into pure practice. Section 4, Step-by-Step Timeline. We can break this pretty daunting administrative journey down into 3 digestible phases. Phase 1 is consular processing, which happens entirely back in your home country. Phase 2 is domestication. That's what you do the absolute second you land in Greece. And Phase 3 is the actual Article 5C activation, where you finally secure that tax discount.
Now, you are up against some seriously strict deadlines here. First, expect 10 to 30 days for your consulate to approve your Type D visa. Once you enter Greece, the clock instantly starts ticking. Within your first 30 days, you must get down to the local tax office to secure your AFM, which is your Greek tax identification number. Before your 12-month visa expires, you've got to apply for your formal 2-year residence permit. And perhaps most importantly, do not forget this one. You must submit the petition to transfer your tax residency by March 31st of the fiscal year following your relocation. If you miss that March 31st deadline, you could completely derail the whole shebang and lose your 50% tax exemption plan.
All right, now for the reality check. Let's move on to Section 5, Hidden Costs and Trade-offs.
Ouch. Here is a massive gotcha that almost nobody talks about on social media, the prokatavali foru. That translates to the advanced tax prepayment. If you set up that Greek sole proprietorship we were just talking about, Greece literally requires you to prepay a huge percentage of your estimated tax liability for the following year. For established businesses, it's 55%. For brand new businesses in their first 3 years, it's 50%. That means in your very first real tax filing year, you are effectively paying 1.5 times your normal tax liability all at once. It creates a tremendous cash flow burden, so you absolutely must have savings set aside to cover.
And here is another, honestly, kind of quirky rule of the Greek system. To combat tax evasion, Greece actually mandates that tax residents must spend at least 30% of their annual income locally, and it has to be via traceable electronic means. We're talking debit cards, bank transfers, online platforms. If you fail to hit that 30% local electronic spending threshold, the government will slap you with a flat penalty tax on the shortfall. So yeah, you have to track your everyday expenses super carefully. Let's rapid fire through a few final trade-offs. First, keep in mind that the 50% tax cut only applies to income tax. You still owe full mandatory Social Security contributions to IFCA, and that can easily run you hundreds of euros a month if you're a freelancer. Second, under those new 2026 laws, if you are late renewing your residence permit, they hit you with a strict fine of 100 euros for every single month of delay. And if you wait past 3 months, you are legally blocked from renewing at all. Finally, let's talk digital infrastructure. Greece has done an amazing job rolling out 5G coverage across over 100 islands, which is awesome. But the fixed-line broadband averages only around 75 megabits per second. If you're doing work that requires ultra-low latency or massive symmetrical upload speeds, you might be restricted to living in Athens or Thessaloniki rather than working from a remote island beach.
So what does this all mean for you? Is the Mediterranean lifestyle actually worth the bureaucratic reality? Look, the 50% tax exemption under Article 5C is undeniably one of the most powerful financial incentives in all of Europe right now for remote workers. For a high earner, saving tens of thousands of euros a year while living right near the Aegean Sea is an absolute dream. But as you've just seen, that dream requires navigating advanced tax prepayments, mandatory local electronic spending, and some pretty complex corporate structures just to avoid regulatory voids. So what do you think? Does that massive financial reward outweigh the heavy compliance burden? I hope this explainer gave you the real, structured facts you need to make that call. Thanks so much for joining me, and keep learning.